Assalamualaikum warahmatullahi wabarakatuh. Good morning, sir and friends. We are from Group 10 of Seminar on Tax Management class. We will presenting about the article of tax planning and avoidance and evasion in Australia. So before we start it, let me introduce myself. My name is Rahan Skaritya, and the other members of the Group 10 are Muhammad Farhan and Mutia Putri Hefra. So for the first, will be presented by me. So on introduction, initially adopting a common and control regulatory approach in the late 1970s and early 1980s, government agencies on Australia imposed explicit criminal charge deal with wrongdoers by making specific legislative amendments to federal statutes. And in 1981, the new general anti-avoidance rules were designed to overcome the inefficient and inadequate in combating the blatant, artificial, or contrived tax avoidance scams so prevalent in the 1970s until 1980s. And in 1990s, the Australian government began to move away from the command and control approach towards one of responsive regulation and meta risk management. So on part one, tax planning, tax avoidance, and tax evasion, legal and illegal tax arrangement, most transactions ultimately have a tax effect. To anticipate this and minimize one's taxation, cost is part of competent business. The difference between tax planning, tax avoidance, and tax evasion activities lies between what is acceptable legally and what is considered unacceptable or illegal. Acceptable tax planning is the legitimate exploitation of legislated tax incentive and ordinary business structures that can result in the obtaining of a favorable tax result for a taxpayer. Until recently, the tax avoidance enabling taxpayers to lessen their own obligation. Meanwhile, tax evasion activities are in the contravention of the law, whereby a person who derives a taxable income either pays no tax or pays less tax than he would otherwise be bound to pay. Tax evasion includes the failure to make a return of a taxable income or a failure to disclose in a return the true amount of income derived. The difference between tax avoidance and tax evasion are tax avoidance involves using or attempting to use lawful means to reduce tax obligation. Meanwhile, tax evasion involves using unlawful means to escape payment of tax. The problematic 1970s and early 1980s, facilitated by poorly drafted and inequitable legislative restrictions, the attitudes of taxpayers, tax advisors, and the judiciary, and a free market, a tax avoidance industry evolved and flourished in Australia. By the 1970s and 1980s, tax avoidance scams that were being engaged in by taxpayers, with tax professionals openly promoting, marketing, and selling such schemes and assisting taxpayers to take advantage of statutory structural loopholes. Another schemes by taxpayers to minimize their tax liability altered the incident of any income tax or relieved any person from liability to pay income tax, or defeated, evaded, avoided any duty or liability imposed on any person by the Act, or prevented the operation of the Act. The response by the Australian government from the late 1970s. By 1974, the Australian government began its investigation into the Australian taxation system by establishing the Taxation Review Committee. This committee produced the ASPRE Review in 1975, whose key theme was to improve equity and efficiency of the tax system by broadening the tax base. The review set out the three principles of tax policy reform: fairness, efficiency, and simplicity. The retrospective application of this act was viewed with great suspicion because of the rule of law breach in making something illegal after the event. Over the next 5 years in particular, a number of new legislative provisions were introduced by the Australian government with the purpose of prosecuting those identified as wrongdoers and deterring others who were of like mind. This was predominantly achieved under a command and control approach by imposing pecuniary penalties and confiscating tainted property, or in bracket, the fruits of crime. Accordingly, the Act's Interpretation Act in 1901 CTH was amended by including a new section, which is Section 15AA, which allowed courts, when interpreting ambiguous provisions, to draw upon the purpose and intention of the legislation, thereby impeding the opportunities for those seeking to exploit the tax system by appealing to a literal interpretation of the legislation. A foreign tax credit system was also implemented in 1987 to address international transactions. The year 2000 saw a broad-based goods and service tax introduced, which inter alia was to keep a lid on the cash of economy. This gradual broadening of the tax base attacked anomalies and also helped roll back the tax avoidance and evasion industry. So the next will be presented by Farhan. So Farhan, time is yours.
Okay, thank you, Rehan. Next, the 1980s NGIRR Part 4A ITAA 36. Part 4A was ostensibly introduced in order to bury the doctrines that rendered it 260s largely ineffective throughout those tax evasive years 81, and to also crack down on the blatant artificial or counterfeit tax avoidance scams of the past. The effect of Part 4A allow the Commissioner of Taxation to set aside certain financial transactions if satisfied that they were made with a view to avoiding tax. For Part 4A to apply, the Commissioner is required to prove to the court that the taxpayer entered into a tax avoidance scam with the sole or dominant purpose of obtaining a tax benefits. And the next, Part 4A, more comprehensive than 260s, is Australia key and anti-avoidance measure. Part 4A allow to the Commissioner to reach an effective, comprehensive compromise, which is uh, important in situation that call for some flexibility. Much of this has to do with the Commissioner reconstruction power contained within Part 4A under uh, 70, 177 F as not in hard case section 177 for F allow the commissioner to strike down anti-avoidance scam in a number of ways. For example, under S177, if when the commissioner can disallow a tax benefit to taxpayers in whole or in part, Section 177F2A operates where there is a tax benefit as obtained under S 177CA. Under this subsection, the commissioner can apply an amount of withholding tax in whole or in part. Section S177 3 enables the commissioner to determine that certain amount in relation to scams, where it is fair and reasonable or not contrary to Part 4A of the ATAA. Next. Current strategies 2000 MGN. Tax planning and tax avoidance arrangement entered into by a taxpayer have drawn further distinctive pejorative connotation by the A2 and the courts. There is no longer the view that such as avoidance scams entered into by a taxpayer will be free from the taint of illegality, with the A2 now taking another approach on what constitute acceptable tax planning or allowable avoidance strategies. Tax avoidance and tax evasion. A2 in recent times has significantly blurred the distinction between tax avoidance and tax evasion, in particular when dealing with the problematic cash economy as well as with those taxpayers who employ foreign tax haven to avoid their tax obligations. The economy, one challenging are where tax evasion has been and still is prevalent is the cash economy. Over time, the Australian government has put a number of legislative and regulatory measures in place in an attempt to equal the growth of the cash economy, starting in the 1980s. In 1983, the government introduced the Prescriptive Payment System, or PPAs. In addition, in 1989, the further reduced the level of tax evasion. For cash transaction, a system of identification using text file numbers, or TVN, was introduced. This allowed efficient compression of information in a taxpayer tax return with information provided to the agent by the taxpayer and other parties such as employers, bank, and superannuation funds. In 2010 and 2011, the ATO has committed informed to send out letter to those taxpayers identified as participating in the cash economy to taxpayers that they have been identified as a result of one of our cash economy indicator, and encourage taxpayers to review their record to ensure they have correctly report all income, especially cash transactions. These letters are part of the voluntary complaints program by the ATO, whose state purpose is to alert those taxpayers at risk on how to correct mistakes and how to make voluntary disclosure. And the next, taxpayer using foreign tax havens to minimize their tax obligation as blurring. The government has insisted on ignoring the distinction between tax avoidance and tax evasion activities undertaken by the certain taxpayer in order to settle and the use and the promotion of foreign tax scams by taxpayers. As McLaren notes under is Division of the Taxation Administration Act 1953. The legislation doesn't revert to tax avoidance or tax evasion, but instead deal with the tax exploitation scams. And the next presentation by Mutia Putri Hefra. Time is yours.
Thank you, Farhan. So the next is tax planning, avoidance, and evasion in Australia. Christina Murphy explained the compliance behavior in Australia of people concerning their tax obligation. They reject the rational choices model, which previously dominated public policy formulation in areas such as criminal justice, welfare policy, and tax, which propounds that people are motivated entirely by economic welfare, where they calculate all associated risks and opportunities and disobey the law when they anticipate that the probability and the monetary fine of being caught are lower than the economic gain that would result from the non-compliance. Next. Next is the complexity. The Australian taxation system is complex that generally taxpayer attitudes to fairness, trust, and moral are important factors. There are over 125 types of taxes that may apply to Australian taxpayer, where current tax law allow taxpayer to slide from the one type of tax to another, or slip from higher or lower marginal tax rate solely to reduce tax liability. Australian reviewer Henry released his latest review on May 2010, also recognized the same, and there are too many ways to deliver the multiple policy objective through the tax system. Next. The Henry Review noted that too that the myriad of taxes may well allow the taxpayer to make economic based and self-interest choices when determining their tax liability, where the provision of choice in determining a tax liability can increase complexity and result in higher compliance costs, where taxpayers seek to discover the best tax outcome. And it is this choice and the corresponding inefficient in the current tax system, which further add to its complexity. Additionally, not only there are too many tax laws, but many of them are inordinately difficult to taxpayer to understand and apply. It will be argued that consideration of fairness, conditional corporation, moral obligation, and taxpayer attitudes, as well as tax complexity issues, extensively underpin the ATO's approach in its taxpayer compliance programs today. Next. Uh, Next is the tax regulatory theory and the ATO's approach. Several regulatory approaches or technique can be taken with respect to any one or number of behavior of people in society to influence industrial sorry uh, to influence industrial, economic, or social activity under the command and control regulatory approach of the past. The full force of the law with regard to taxation was utilized up until the mid 180s to control and monitor certain tax avoidance and tax evasion behavior with sanction, penal, and criminal, to ensure that certain conduct of some taxpayer was discouraged or even prohibited. This type of regulatory approach began to change in the mid 80s when it became the apparent that was considerable disquiet amongst taxpayers. The negative reaction to the retrospective legislation enacted to deal with scams such as the bottom of the harbor signaled to the government that such command and control approaches on their own were unsavory and unacceptable to many taxpayers. Such an approach could not continue to be effective in dealing with the complexity um, of the tax system and its administration, and drawing from the regulatory theory, the approach of the OECD, and changing the taxpayer attitudes over the last 40 years, and the ATO has significantly modified its adoption of tax regulatory strategies. Next. Next is the voluntary compliance. So, based on the figure that we see below, the ATO has come to recognize that there are a number of factors that motivate taxpayers to comply or not to comply with their tax obligation. And based on this model, they use a different mix of responses and intervention in order to influence taxpayer behavior in a positive way, including educations, guidance, taxpayer advice, taxpayers alert, audits, and penalty, and also the prosecution. Where appropriate. The ATO's ultimate aim to influence as many taxpayers as possible to move down the pyramid into the willing to do the right thing zone, with optimizing the voluntary compliance. Next. Next is the measure success. After examining data that released by the ATO concerning complaints in 2009, it was noted that when examining net cash collection for the 2009 period, they were 1.2% above the 2009 budget forecast, suggesting that complaints level remain relative high. The 2009 year also saw a marked increase in lodgements, as well as an increase in GST collection, as well and an increase in large businesses voluntary disclosure tax issues. Next. And for the last topic is the push for 2010 beyond. The Australian government has indicated that it will action many of the recommendation of the Henry Review to ensure that they are provide a stronger economy and fairer and simpler tax system. Um, In May 2010, the Australia government announced a number of tax reforms that they were to be implemented, including the introduction of standard deductions for many Australians, a thick and flake system of pre-filled tax returns that will make life easier for working families at tax time. They also announced that the introduction of a new super private tax to be implemented to the mining sectors.
Okay, that's all from us of Group 10. If you have any question, feel free to ask. Thank you very much for the attention. Assalamualaikum warahmatullahi wabarakatuh.